Picture this. Two people with the same job, same salary, same house. Yet one of them pays more than $250,000 extra over their lifetime. The reason? A three-digit number that quietly controls the price of nearly everything in their financial life. If you're tired of paying hidden costs you didn't agree to, hit subscribe and turn on notifications. Let's break down how the system really works. Section 1. The invisible tax, the subprime penalty. Most people assume a low credit score just means you'll be denied a loan. In reality, the opposite often happens. You get approved, but at a much higher price. The data. Median U.S. home price, about $410,800 in Q2 2025. Borrower A, 760 plus score, qualifies for 6.5% interest. Monthly payment equals $2,528. Borrower B, 620 score, qualifies for 8.1% interest. Monthly payment equals $2,962. Difference, borrower B pays $434 more each month. Over 30 years, that's $156,000 in extra interest. That's money that could have gone to retirement savings, education, or building wealth. And mortgages are just the start. Auto loans and credit cards often carry double-digit rates for lower scores. Add it all up, and the lifetime cost can easily exceed $250,000. This is the credit cost, an invisible expense that drains households without ever showing up on a tax form. Section 2. The origin story. It's newer than you think. We treat credit scores like they've always existed. The reality, the FICO score was introduced in 1989. Before that, loan officers made decisions face-to-face. That system was flawed and biased. FICO was marketed as objective, but instead of eliminating bias, it standardized it. Fall behind once and the system makes everything more expensive, which makes catching up harder, which leads to more missed payments. It's a cycle that traps people in higher costs. Credit scores don't measure wealth. You could own $1 million in assets and still have no score. What they measure is your relationship with debt, rewarding those who borrow and repay consistently. Section 3. The insurance factor. It's not just loans. Credit scores now influence far more than borrowing. Car insurance. In most states, insurers use credit-based scores. Drivers with poor credit often pay substantially more, even more than some drivers with serious violations. Housing. Landlords use scores to approve or deny applications or to charge higher deposits. Utilities. Companies may add connection fees for lower scores. Cell phones. Providers use scores to decide if you qualify for the latest devices or must use prepaid plans. Your credit score has become a life score. When it drops, nearly every aspect of daily living becomes more expensive. We're uncovering how the credit system really works. If this resonates, hit the like button. It helps spread financial literacy to more people. Section 4. The Utilization Strategy, the 30% myth. One of the fastest ways to improve your score is by managing credit utilization, which makes up about 30% of your score. The myth. You should carry a small balance to show you use credit. The truth. Wrong. You should pay your bill in full, but you need to watch when the bank reports your balance. The strategy? Lenders report balances at the statement closing date, not the payment due date. Example, $1,000 limit, $900 spent. Even if you pay on the due date, the bureau already sees 90% utilization. Fix? Pay down your balance 2 to 5 days before the statement closes. The bureau sees near zero utilization, which may noticeably improve your score, depending on your profile. Section 5. The Authorized User Advantage, Generational Wealth. This is how the wealthy pass on financial advantages. It's called piggybacking. How it works? A parent with a strong credit score and a 20-year-old credit card adds their 18-year-old child as an authorized user. The child never gets the card. The child never spends a dime. But the next month, the entire 20-year history of on-time payments from the parent's card is reflected on the child's credit report. Result? The The child may start with a strong score, qualifying for lower-rate loans and saving thousands. Meanwhile, children without this advantage often start at zero and face higher costs. If you have a trusted family member with good credit, this strategy costs them nothing and gives you a major head start. Section 6. The dispute game, cleaning the mess. 1 in 20 Americans has a material error on their credit report. Examples: paid medical bills are still marked as collections, debts incorrectly linked to an ex-spouse, student loans are showing the wrong balance. The strategy? You don't need to pay third-party credit repair companies. You need the Fair Credit Reporting Act. The law says if a bureau cannot verify a debt within 30 days, it must delete it. Steps? Pull your free report at annualcreditreport.com. Find anything negative, identify inaccuracies, file a dispute online or via certified mail stating, "This item is inaccurate. Please verify or delete." If the bureau cannot verify within 30 days, the item must be corrected or removed. Persistence pays off. Section 7. The Goodwill letter, the human element. What if the negative mark is accurate? You missed a payment. Try a Goodwill letter. Address it to the bank or card issuer. Explain the situation clearly, saying, "I've been a loyal customer for 5 years. I missed one payment in 2023 due to a medical emergency. I caught up immediately and have been perfect since. This mark is hurting my ability to buy a home. I'm requesting a Goodwill adjustment." It's not guaranteed, but many issuers grant these requests to retain customers. Sometimes a single letter can make a major difference. Credit scoring is a system that raises costs for lower scores, rewards consistent debt management over wealth, extends into insurance, housing, and utilities, can be improved with utilization timing, can benefit from authorized user strategies, contains errors you must dispute. Don't let a number define your worth, but don't ignore it either. It can control $250,000 of your money. Learn the rules, apply the strategies, and keep more of your wealth. I'd love to hear from you. Have you ever been denied something because of your credit score? What's the biggest improvement you've seen in your score and what helped you achieve it? Drop your answers in the comments and subscribe for more financial education. Thanks for watching.